If you had to kind of pick something, our Fed Wednesday, China's meeting, GDP, whatever it is.
Wednesday jumped out at me with the existing home sales and the Fed. I mean, we've been contending that the Fed's the biggest risk to the economy and the market since back in the summer. And the housing is where we've seen that weakness, along with auto sales as well. I think Wednesday is the big day for us. I mean, the Fed is the key to it all.
Yeah, Stanley Druckenmiller, well-known hedge fund manager, op-ed in the Wall Street Journal, basically pleading with Jerome Powell and the Fed, take it easy. Back off these rate hikes. Would you agree with that?
Yeah, we ourselves pleaded in our last missive, our market at a glance, that, it wouldn't be such a far-fetched idea to, pause and reevaluate for a moment here now that we've been at this for several years now, a couple of years, and we're seeing some pushback on it. I think we're getting close to normal. They've started to get a little bit more, dovish about it in their rhetoric, and if we can, we'll probably get that hike. Everyone's expecting in December.
Wednesday.
But if the language is data dependent, we're very close to neutral. We're not in a
they've said in the past,
like the most recent stuff, not the one before that. But if they're along those lines, then I think the market could even take off and get positive this year.
The bond market is doing a little bit of that for the Fed.
It's supposed to,
right? The 10-year yield at 2.89,
right.
Whatever
it's
it is,
come back quite a bit.
So the bond market has, in some ways, backed off.
The Fed's supposed to be listening to the bond market
on their own.
Exactly, and they have. And we've got some growth, some slowing down, some earnings, forecasts and numbers that are pulling back a little bit. I think the Fed's done its job and gotten to normal and, kept inflation in check. And I think it's time to take a pause.
Your long history that you guys study so well
in
the Almanac says things are going to be, they were supposed to be good this month.
That's not the greatest sign in the world, but we'll wait until the end of the year in January to get our, final assessment. We're going to be putting out our forecast on Thursday. But all of this negativity going against seasonal patterns is a negative indication. I don't like it. And we'll wait for Santa Claus. What Yale created back in '72, the last 5 days of the year, the first two of the new year. If that's down, as it has been when it was in the past, several times in 2000, 2008, 05, 15, and 16, we've had weakness. A couple of bear markets and times when you could buy stocks cheaper.
But you think it's too simplistic now simply to say history says, the calendar says this is usually good. Not the case right now. Because there's a lot of stuff swirling around.
Stuff swirling around. But what history does say and what the calendar does say, when the market doesn't behave as it's supposed to in those bullish periods, there's a lot of other factors at play, and that's what we're seeing here. So that's the use of seasonality as an indicator.
All right.